Let's review some different forms of financial capital. Things we can invest in are sometimes called securities if they're tradable. So securities include shares, so a proportionate ownership of a company, bonds, so promises to pay usually fixed amounts of principal and interest, and ones we were looking at earlier, gilts, those issued by a government. So the UK government promises to pay in the next period up to 2030 interest at a certain rate twice a year. That's called gilt-edged stock. Another form of bond is a corporate bond. So any company that could persuade others to invest in it and comply with the requirements of the markets can issue similar forms of debt. So the borrower is the one writing out a bit of paper, a bit of electronic paper, essentially saying, I owe you what you invested plus some interest on top. The investor pays away their money, they get the bit of electronic paper, and then the issuer, the borrower, repays. So there's a little mnemonic there, SSBG plus. Securities comprise shares, SS, bonds. Bonds in turn comprise gilts, gilt-edged stock, government bonds, plus corporate bonds, and indeed local governments and other organizations can issue bonds as well. So these are forms of financial capital, and notice they've got two sides to them. So an investor who's paying away money in return for a promise, and somebody using the invested capital, so a borrower or the issuer of equity shares is going to use that capital for some sort of activity, a profit-making business activity for a commercial company, earn surpluses and returns, repay for a redeemable piece of debt, the amount invested and interest on top in terms of equity shares, grow the value of the company and pay dividends, or retain the value in the company and just grow faster, not paying dividends. So these are different forms of financial capital, sometimes described as securities. And remember, they've got two sides to them, and investors need to be reassured about the inherent risks of the entity that's issuing the promises and taking the money, and the competence of the managers and their integrity in managing the funds.